on the table of contents, we'll talk about introduction to Fibonacci levels, Fibonacci retracement levels, Fibonacci extension levels, Fibonacci in trend identifications, and trading strategies with Fibonacci, and then finally the conclusion. So, a Fibonacci trading is popularly known in Forex trading for identifying continuations and retracements, or rather pullbacks in trends. Now, this Fib sequence is formed by taking two numbers, only two numbers, adding both numbers together to form a third number, and the second and third numbers are added again to form the fourth number. And the ratio of the last number over the second to the last number is approximately equal to 1.618. Now, the Fibonacci retracement levels are 0.236, 0.382, 0.618, and 0.764. And the Fibonacci extension levels are 0.0382, 0.618, and 1.000, and 1.328, and lastly 1.618. Now, the Fib levels work on the theory that after a big price shift in one direction, the price will retrace or return to a pathway back to its previous level, forming a support or resistance before resuming to its original directions. So it's more like trends. Now, traders use these Fib levels as a potential support and resistance areas. Now, since many traders have the same levels in mind to enter, sell, or buy trade, it becomes a psychological level, a psychological support and a psychological resistance areas. Now, traders use these Fibonacci extension levels for profit-taking levels in the markets. Now, in order for you to apply these Fib levels to your chart, you would have to identify each swing high and swing points, the swing high and swing low and swing points in the price in the current market. A swing high is a candlestick with at least two lower highs on both left and right of itself. And a swing low is a candlestick with at least two higher lows on both the left and right of itself. Now, how do you use a Fibonacci retracement level? Now, the idea is to go long on a retracement level, which is a Fibonacci support level, where it finds supports, where it finds a leverage. Now, when the market is trending up, and then short on a retracement level when the Fibonacci resistance levels in the market is trending down. So it's simple. When it's trending up, you look for support resistant areas, psychological areas through the Fibonacci retracements, and go for a long, go for a buy. And in a downtrend, you look for psychological resistance areas through the Fibonacci levels and go short. So it's like buying the low and selling the high, but the low of a buy and the high of a sell. And you need to be able to identify these levels in order for you to have an edge in the markets. Now, the Fibonacci is basically a predictive technical indicator, since they attempt to identify where the price may be in the future. Now, the theory is after price begins a new trend direction, the price will retrace or return pathway back to its previous price level before resuming direction of its trend. It's very simple. So if you look into the picture I have here, how do you use a Fibonacci? You have to go to a bigger time frame, identify its swing low and swing high. So I talked about trends, and I talked about highs and lows. If you haven't watched it, go and watch the trend class and watch the candles class. So you identify the swing high and swing low in a 1 day chart, and then go to a 4 hour chart or 1 hour chart, and it becomes like this. So the swing low and the swing high. So in the Fibonacci, you'll be looking for areas that are of great relevance in the markets, like the 38.2, the 50%, and the 61.8. And if you look at these levels in the Fibonacci retracement levels, you can find a support for or support or resistance for bounce back. So here we have a downtrend, and before the downtrend started, it found a support for its last movement before the downtrend. So you can see it had a position on the 50% level before it bounced back up to the 80%, which is the premium, before you took a sell, and then came to the 23.6 level, which is close to the discount, before it retraced up to the 38 and then went below. So this is a common way as to which traders have an edge in the market. So they identify the major areas and look for the psychological areas through the Fibonacci retracement levels and use it as an edge in the market. Now, Fibonacci extension levels are more of profit-taking levels. Now, the Fib levels are 0.38 levels. They held the 0.38 level in this picture held strongly and as a support after two tests and resumed its uptrend. So in the retracement levels, you'll be looking for potential places as to which you could take profits. So if you are in the market and you identify your swing high and swing lows, and you're in the market, you'll be looking to take profit in the next targets of the Fibonacci levels because they come in portions. So this is how you take Fibonacci levels: identify the swing low, get to the swing high, and then when you're in the market, you can see it got a support level twice. It tested twice on the 0.38, and then you can be looking to take profits between the half or the 0.68 or the maximum premium, which is 0.786, or if you are very confident enough, you wait for the one. You wait for the one in the Fibonacci levels. So Fibonacci in trend identifications are, it's very simple. So like I said, as a recap, you have to identify the trend, select the swing high and swing points, use Fibonacci tools, execute these tools, and observe retracement levels, and analyze the chart and entries and exit points. But this is an example of how to use Fibonacci in trends. So you have the higher low, we have the higher high, we have the higher low, and we have the higher high in this picture. So you put your swing low and swing high in the Fibonacci, and then you look for possible retracement levels in the market for the next buy option. And as you can see, it got to the 0.236, which is the discount, which is the initial trend, which is the initial beginning of a trend. The initial beginning of a trend are usually the longest because it signifies a strength in reversal. So it goes up to the higher high, and then the next higher low where it finds support is in the discount of the 0.26, and then it goes up, and then it goes to the premium, which it rejects a little and finds support in the half in the 0.5, and then it breaks through the resistance, and then it becomes a support when it comes on top of the premium and gets to the extension levels. So this is exactly how to use a Fibonacci level or Fibonacci retracement or Fibonacci extension in trading. Now, trading strategies with Fibonacci levels. For you to be able to achieve a very good layout in Fibonacci levels in trading, one has to be able to know that you cannot use this indicator alone, because it's not subjected to it being used alone. You have to be able to use it with trend lines, support and resistance areas, and candlesticks. And when I say candlesticks, it means vital candlesticks. It means candlesticks that indicate a change of character, like hammer, Twitzer tops, Twitzer bottom, three white soldiers, shooting star, and so on and so forth. I had listed them in the candle class, It's very it's ideal you go back to the previous class to watch about trend lines, support and resistance areas, and candlesticks in order for you to be able to apply this Fibonacci level properly in the market so you could achieve the best and have the edge in being profitable in the markets. And this is exactly what a Fibonacci retracement settings look like. So you can see how it's been arranged in mine. You can see the levels from 0 to 100, and once you use this, you can find an ideal areas and common areas as to which you could find your support for a buy and look for your resistance for a sell. Thank you, and I'll see you in the next class.